If I set my stop loss and take profit here, 1-to-4 ratio, open an exact opposite position at the same time and wait for the news to be released. Then price hits my bullish stop loss and my bearish take profit. And if you do the math, I just won 3 times the amount I risked. But when should you actually trade this setup? What's the best risk ratio? And most importantly, does it really work? Just keep watching until the end and you will know. But let's start from the beginning. It's 1:59 a.m. and in less than a minute, the inflation rate of the British pound is going to be announced. But why is this so important? I actually couldn't care less about the actual inflation, but I'm way more interested in the huge candle it makes us. Pretty often when some kind of news get released, lots of traders all go either bullish or bearish. But how do we know if price is going to go up or down? It's because we don't. We can though assume that it will go extremely fast in one direction. Let's assume it will go up. Then we would set our stop loss somewhere here and take profit here. But if it goes down, set it here and here. But we don't know what's going to happen. So let's just put both orders. We sell and buy at the same time. How is that possible? We just use hedging. Hedging is just when opposite positions don't cancel each other out. Now, if it goes down, it first hits the stop loss of our long position, and then it later hits the take profit of our short position. And if we calculate 4 risks minus 1 risk, we in total get 3 risks. But what happens when price first hits both stop losses? Well, then we would lose both positions, which would result in a total loss of 2 risks, which is still less than what we would get when we win. So if this strategy wins half the time and loses half of the time, we still stay profitable. So the goal is to avoid consolidation by all means, and this is the reason why you should only trade this setup during the news. Let me explain you my exact strategy. We wait exactly until the candle before the news, open 2 opposite positions, both with the stop loss 1 ATR above and below price, and using a 1-to-4 risk to reward ratio. So setting our take profits 4 ATRs above and below the close. And now we just wait for price to go in one direction. Here you see it, we won. Also, it's important to mention that if you're using a risk to reward lower than 1-to-3, you'll end up winning less than you lose. Meaning with a 1-to-3 risk to reward, you'll win 2 risk every win and lose 2 risk every loss, so you barely stay profitable. Because of this, I'd recommend using a ratio between 4-to-20. 4 is great for an overall win rate, while with 20, you try to target the news releases that instantly make a huge move in one direction. Before I show you the backtesting results, make sure you're subscribed so you won't miss out on any smart strategies. I backtested the exact strategy with a 4 risk reward ratio for the last 5 months, and it has generated me 49 wins and 41 losses, which results in winning 65 risks. So if I would have always risked 1% of my account for each stop loss, I would have made 13% each month. Now, there is one issue though I encountered when trading this strategy live, which is the execution time. You may now think, oh, a few milliseconds aren't going to make a big difference. But it does play a huge role, especially if price is moving so fast during the news. So getting a broker with fast execution time, or even trading on the broker's platform, not over trading view, might solve this issue. The fastest Forex broker available is Pepperstone. I'll leave a link in the description.